Hi guys, welcome to the SavvyMoneyShow. Me, your host Sean. Well, we're obviously talking about Robinhood and the GME situation, but we're taking a bullish and bearish viewpoint. Trust me, I'm not pro Robinhood, but we're going to look at it from a different angle. We're going to start pro Robinhood and then anti Robinhood. Now, we start with SEC issues warning as GameStop short selling war continues. Hopefully you will have seen Kevin O'Leary's arguing for retail investors while the others were all arguing against them. I think you should, because it was incredibly good. And what people don't seem to realise is new regulations were brought in by the depository, like the Apex clearinghouse that Webull uses, and of course the clearinghouse that Robinhood uses. That's what we're told anyway. And basically what usually happens is 2.8% deposit is needed. It will take 2 days to clear. It's a 50-year-old way and hasn't changed in those 50 years. The only change that has happened is that it's gone from 5 days to 2 days. And what they did is they saw an increase in these I'd call them OTCs and cheap stocks, penny stocks, and they asked for 100% deposit rather than 2.8%. And of course Robinhood couldn't afford that, neither could the other brokers. The SEC is investigating, because what happens is Robinhood doesn't buy the stocks for you. Robinhood doesn't hold your money for you. They're not allowed to since the last financial crash. They have to hold it in a bank, which isn't theirs, and someone else has to. What happens is it goes from an exchange to an ESD, which is an essential securities deposit, which is counterparty to it, and the payment doesn't go for the 2 days. If thousands of people make risky purchases using margin and then end up screwing the broker out of money during that period, the broker has promised the clearinghouse the money. Oh, sorry about that. I'll delete that. That was from TikTok. Then what will happen is if the broker can't pay that money and end up goes bankrupt because too many people refuse to pay the broker. And before you say this won't happen, I have heard from some people who have made their portfolio to hundreds of thousands that earlier at the start they were losing money, and they've said, well, I thought to myself, sod it, I'll take out margin. What are they going to do? Bankrupt me? Well, you know, if I'm going to go down, I'll take out margin, and they've turned it around. And then we've seen the other side of it, where these kids have committed suicide because they've taken out margin and it's gone wrong. Now, if they go bankrupt, the broker goes bankrupt, and then the deposits want rather than taking a 98% loss, they want to be making sure they're getting all their income. Now, especially on stocks like GME. Hi guys, why not hit that lovely like button and comment in the box below? It really does help with the YouTube algorithm and getting the video out to more people. While you're at it, why not hit that red subscribe button if you haven't already. And have a look at smashing that bell notification. You'll be notified when I upload a new video. Now, if you're looking for a free trading platform on which to trade your stocks and shares, why not check out the links in the description below. You'll get a free share worth up to £200 for signing up and depositing a small amount. There's links for Stake, Trading 212 and Freetrade. There's also links to other freebies, as well as videos you may have missed, and my Trading 212 pies, which I rebalance regularly, so why not check them out. And of course others, so they stop trading. Now, the thing is, these brokers could have done things better. Now, Robinhood knows that the other brokers follow them. They started with the zero commission trades, and they were reducing margin costs, and other brokers were planning to reduce them as well. So for them to do it this way, rather than kind of limit it, rather than just warn people first of all, then I think it was wrong. Or just stop trading of all kind on that stock. Now, this was a billboard put up by a friend of mine, Ryan, who was in it, and these are stocks, SPACs, sorry. Now, I do think that Robinhood is going to lose an awful lot of money from this, because they're going to lose an awful lot of customers from it. Now, in December 6, 2019, SEC granted Psth, company that processes for PayPal, their right to conduct a 2-year feasibility study for blockchain for trades. Now, as I said, at the moment it takes 2 days before now if it becomes instantaneous clearing, or even 1-day clearing, then this will make a massive difference. And something else people haven't noticed is the Dow was down 620 points. The Dow Jones Industrial Average was down 1100 points in a few days last week. No one noticed. There's some people saying we're going to have a crash to rival 1929, but when Apple's earnings per share was 168 versus 141, they beat revenue by $8 billion, and in 3 months the iPhone revenue jumped 17%. Everything was up, but Apple was down. Microsoft was $2.03 versus 164. Revenue was 43.03 billion versus 40.18 billion. They grew 17% annually, and they was up from 12% annually. So their revenues grew by 5%, and they were down. They had a little bump when it first came out after hours, and then it went down. Facebook was 388 versus 322, 28.07 billion versus revenue versus 26.44 billion. Daily average users were 1.84 versus 1.83 billion. Monthly average users 2.8 billion versus 2.76 billion. And average revenue per user 1.14 versus 9.49. Now it fell. Sorry, not 1.14, sorry, it's 10.14 versus 9.49. It fell. Now we know Facebook is likely to have a bad quarter next quarter, but they've all fallen despite having blowout earnings. You know, Tesla had blowout earnings. The only thing it didn't do was hit its $1 expected earnings, but it hit 86, which it had never hit before, and still it's fallen. Skyworks Solution should have gone up 20%, only on its earnings, only went up 5%. Why? You've got to look into it. Now, one of two things is happening. Either retail investors are pulling out of these well-known stocks to go into the shorting stocks like GME, AMC, or we're going to have the institutions are looking at these stocks thinking they've overperformed, that the Schiffer alert system is going off like an alarm bell. It's higher than it was in 1929. So instead of keeping a large portion of our money in there, we'll sell half of our position in each of it. Hope no one notices. Hopefully the buying activity will cover it, and then that will cover some of our losses. If it doesn't, the money we take out of there we'll put into SPACs and try and get our money back, because SPACs have a lot of room to run, easier to predict. But no one's talking about all these drops. Anyway, don't forget to hit the like button, comment and subscribe. It really does help, and I'll see you in the next video.